All right, 2025. Trump inauguration yesterday, starting the year off with some change. What stood out for you guys yesterday?
Your executive order for us to attend yet another podcast at the start of the year, so we'll follow you as chief administrator, man in power, Jay.
It'll be an interesting 4 years, put it that way.
I thought it was interesting to see all the tech executives there to kiss the ring. I mean, very different scene than 8 years ago with who was in attendance and lining up to curry some favor there. So anyways, I'm sure we've got lots of Trump on the horizon, and our listeners are going to get their helping of that. So let's get right into it and talk markets and see what's in store for the year ahead. So we're episode 1 of 2025, but this is the 19th edition of Wealth Talk, unraveling current events and market trends with Plena Wealth Advisors. As always, we've got Craig White up in Kelowna and Clark and myself down here in our Vancouver office. So today in store for everyone, we're going to look at last year's kind of bold predictions for 2024 that we made, get out the scorecard and see how we did on those, and then look at what we've got lying in front of us for the year ahead, and make some predictions, which we're a little shy to do here, as we're pretty consistent saying, you know, the future's unpredictable, but we'll have some fun and see what we can come up with to provide a little bit of entertainment more than anything. So last year we kind of all put together, what we tried to do was come up with some non-consensus calls, some things that were a little bit maybe out of the ordinary in terms of what we might see in 2024. So starting with Clark, actually he was bang on with his first call, saying that interest rates would get cut on the short end of the curve, but would actually kind of sustain some height on the medium and longer end of the curve, and that's pretty much exactly what happened. So I'll give you an A+ for that, Clark. Any comments there on what happened with interest rates last year?
Yeah, if you look back a year ago, I think there was this notion that rates were going to come down heavily, and it I think what I said at the time was that the central banks would continue to have inflation, monitoring inflation. I also thought that what we'd start to see is a normalizing of the yield curve, and longer term rates move up with this expectation that we're going to come through the slow down pretty well, but there'd be some loosening on the short end, just as central banks are trying to get through what was a bit of a softening of the economy. So it's exactly what happened. I think in the States, the Fed funds rate was 5.5% at this time last year. It's 4.5% today. And Bank of Canada, it was 5, and I think 3.25 today. And then, as you said, 30, the 5, 10, and 30-year U.S. government treasuries yields all ended up higher at the end of last year relative to the beginning of last year. So I think where it counts, the economic predictions that I made were right. I think some of the other ones that you'll get into, maybe that weren't economic, maybe they were just guesses. But why don't you handle those right now?
Yeah, so geopolitics, I guess a little bit of a call that Taiwan was going to come to some sort of a head, and that thankfully never materialized. Seemed to have kind of died down as China kind of grapples with its own economic issues, I guess, was the focus of them last year. So not so hot on that one. Biden or Trump being in the White House or elected in 2024, and obviously we had Trump elected, so missed the mark.
For a sec, though. I did get that partly right. Do I get points for being 50%? So I think the theme was correct, right? Is that we had it wasn't Biden in the election, it was somebody else. So I had that thinking earlier last year that he'd be replaced by somebody else. Also, I thought that something would happen to Trump. There was an assassination attempt on Trump.
You're an inch away from being right on that one, I guess.
His ear got assassinated, and so I think the theme was right, that there was a high potential that somebody else was going to end up in the White House, but overall the outcome of what I had right, I think, was incorrect. So
anyone who laid a bet on that presumption was not paid out. Let's put it that way. But we'll give you partial marks for directionally being right. And then last but not least, Taylor Swift tickets deflating in price since January last year for the Vancouver show in December. And I think you were pretty close. I think that was more or less accurate. I don't know how much they deflated. They were still exceptionally expensive, but
Deflating relative to what? It was the highest grossing tour in the history of any tour, over $2 billion. And that's not reflection of cheap tickets.
But I didn't say they were cheap. I would say they were cheaper, which a little bit different, right? Yeah, it was deflation with Taylor Swift tickets. So I made that prediction to support two things. One is a deflationary trend in general, which we saw, and two was simply a call that I think at the time, if I remember back, I pointed out there were certain seats, $2,300 per seat this time last year. And I think, when the concerts happened in Vancouver, some people were getting tickets on StubHub for $800. She released some tickets about a week before the concert at $75. So there was the opportunity to buy tickets cheaper towards the concert.
Tickets were behind the stage. Those tickets were behind the stage.
You could have sat in the basement for
next to the urinal.
The cheapest ticket I could find this time last year was $2,300.
Okay.
Tickets were for sale for $75 and $800 closer to the concert. Plus not deflation, but a reduction in inflation did continue last year. So I'm going to you can give me whatever you want. I'm going to give myself a little bit of good.
Let's move on to Taylor Swift.
Partial marks. We'll say that the prediction that mattered in terms of portfolios and what clients are just actually interested in was spot on. So good job on that one. Craig, we've got the main prediction that you had for us last year was that bond proxies would be better performers in 2024 compared to 2023, and bond proxies really in this case means the likes of the telcos, the utilities, the real estate trusts, those parts of the market that are really dependent on interest rates for their performance. And unfortunately, we didn't really see that come to fruition. We were all kind of believers in that theme, but largely because of the yield curve steepening, like Clark's call, where the short end of the interest rate curve did go down with central banks pushing interest rates lower, but the medium and long term of the yield curve didn't really come down at all, which prevented a lot of those bond proxies from improving in performance. But any comments on that one, Craig?
I would probably say I'm somewhere in the middle of the right call or not. Certainly, REITs and telcos, they did not perform all that well this year. In particular, the telcos, we saw that in particular the last quarter to 2 quarters of 2024. I think a lot of those telcos were susceptible to some tax loss selling in the final month or so of 2024. But ultimately, the performance for telcos was pretty weak, in particular the BCs and Rogers relative to TELUS. Those were down anywhere from 20 to 30% in the year. So very interesting to see how they perform coming out of some tax loss selling and we get into the new year. On the flip side of it, I guess some of the utilities, names like Fortis and Emera and Hydro One, they had pretty good years, up anywhere from 10 to 20%. So they performed a little bit better. REIT sector was essentially flat, but all in all, I'd probably give myself, maybe a C+ on that call, but
C+.
Yeah, somewhere in the middle.
Okay.
But again, so much of it is because
grade.
The long end, as you talked about, Clark, the long end of the interest rate curve has been far more anchored. And, here we are upwards of a couple of weeks ago with the 10-year treasury in the States back to 2-year highs, essentially in and around 5%. So I didn't think the long end was going to be as anchored as you had thought. I think that was a big driving factor of what happened with those bond proxies.
I think if you move that prediction that you made last year a year forward to today, I think that may end up being a pretty good prediction for this year.
Yeah, we'll see. Yeah. How about yourself, Jay? What do you have?
So I had Canadian inflation kind of coming back a little bit or resurging, and I think I was mostly wrong on that call. We saw kind of CPI numbers continue to drift lower this year. At the end of the year, we saw a little uptick with inflation both in Canada and in the US as well, but not enough, I would say, to kind of fulfill my call being right. It's going to be interesting, I think, over the next 12 months with all that Trump promises in terms of tariffs and the impact that that's going to have on inflation. I still think we're in a situation where there's a lot of dollars chasing not so many goods that are being produced, partially the COVID kind of monetary policy having a lingering effect. But for now, thankfully, inflation is still more or less under control. I think for Canadians, it's really important given our housing sector and the amount of debt that we've got across both kind of households and government balance sheets. So good thing that I was wrong here so far, and hopefully that kind of remains that way.
You had another one, I think, didn't you? You had something to do with
Yeah, my call on Ozempic starting to show some side effects. The jury's still out on that. I will say the market is maybe foretelling my correct assertion there with a lot of the kind of, or the two prominent makers of these GLP-1 drugs, Novo Nordisk and Eli Lilly. Their stocks have rolled over significantly, and maybe that's pricing in either some side effects that are still to come, or maybe just some drops in uptake of those weight loss drugs. I mean, it never seems to surprise me the amount of people that I hear that are all of a sudden taking these, and these are not, in my circle of people that I know, people that are not necessarily even overweight that seem to be on these for various reasons. So it's truly a phenomenon of these drugs that seem to be everywhere with everyone. So yeah, we'll see.
I don't really follow that stuff, but I'm curious. Like going back to your prediction, have there been any side effects that have been noted? I know, as you said, stocks are rolling over. Could be for another reason, but has there been any hint at any side effects that are material?
I haven't seen anything. There might be something that I've overlooked, but yeah, it's I mean, I'm sure there's some, with any drug, there's cases of side effects and bad experiences, but overwhelmingly they seem to be still on everyone's mind. So
Interesting.
let's get into the year ahead. We've got the Trump inauguration yesterday, and a lot of political change happening here in Canada. Where do we see, I guess, from a market perspective? Let's make some calls on Canadian markets, U.S. markets, and bond markets, which are kind of the three markets that most of our clients are invested in and interested in. Do we think the U.S. is going to continue its leadership? Do we think bond markets are going to continue to stagnate? And what do we have in store for the Canadian markets?
But maybe I'll tackle the kind of the broader market conversation, and I think that's parsed on the lips of many these days, and certainly we've fielded a lot of calls over the last couple of months, in particular the last couple of weeks, what the impact is of a new administration. And I think first of all, you got to really compare the two. If you're going to look at what's going to outperform the other, is really look at the economics of Canada relative to the US right now. The economic performance of the US is clearly outperforming Canada. You see that with GDP numbers. I think the latest data of the US it's running at 3.1% out of the US, and that's relative to Canada, which I think is 0.3, I think I read recently. So economically, we continue to be challenged here in Canada. You see that with unemployment rates as well. The U.S. unemployment rates remain relatively low, where we continue to see an uptick here in Canada. I think we're back at 6.7% relative to 4% down in the U.S. We've talked about productivity here in Canada. It continues to decline. Maybe we'll talk about that. Maybe a new government in Canada could spark a little bit more of entrepreneurship and productivity. If I was to dig deeper into the markets, I still think corporate earnings out of the U.S. markets, the S&P 500, I think that continues to outperform. Now, I can't paint those all with the same brush, but I think that the U.S. market outperformance has been supported by earnings growth. We're going to go through the fourth quarter earnings season the next couple of weeks, so we'll see what that looks like. But again, I think the big thing is the new administration. I would say, as of today, if I was to compare where I think there's more catalyst, the new administration is far more pro-business, pro-growth, pro-America, pro-entrepreneurship, pro-capital investment, and ultimately that I think that should support further economic expansion. You've got lower corporate tax rates that are being proposed, less regulation, stuff that we've kind of talked about throughout the last couple of podcasts. And as you talked about, Clark, Trump's hitting the ground running with a lot of these initiatives and executive orders. And for the foreseeable future, I think that's bullish for the U.S. economy at this point.
I'll take a slightly different side of the coin on that. I think you're absolutely right. The U.S. economy, has a good potential of remaining strong, relative to the U.S. I think, as it relates to markets, so Canadian equity market versus U.S. equity market, there will be a point in time, and it's kind of when we least expect it, that you'll see the outperformance of the U.S. versus Canada shift. And it doesn't have to be when the relative numbers start to shift in Canada, like unemployment in the States doesn't have to go from 4 to 6, and Canada doesn't have to go 6 to 4. I think it just has to be an expectation that things will stop declining in Canada relative to the US. So in other words, start to see some slow improvement in Canada or an increase in sentiment, and maybe a reduction in sentiment or kind of a topping out of growth in the United States. And I think, when you look at Trump, the market right now is exuberant on, what can the positive economic things that may come out of Trump. And a lot of that's been priced in with an expectation there's going to be this huge resurgence in the States in the next few years. And in Canada, we have just the opposite. And, what if we do, and I think, Craig, you just mentioned it, you get some political change here in Canada that, starts to focus a little bit more on making it easier to do business in Canada. What that does is it slowly starts to attract investment capital into Canada. And I think, there are some catalysts there that we could be surprised. I'm not going to make the prediction that Canadian market's going to outperform, but I think there are some good reasons where they could. The final thing I'd say about that is generally the U.S. market is more growth oriented, as you mentioned, earnings growth, Craig. And in Canada, a little bit more value oriented. And we talked earlier about interest rate sensitive investments, which are, to some degree partly dominate the Canadian market. That if we see that shift changing a little bit, coming out of growth more into value oriented investments with a decline in rates, potentially you see the Canadian market bid again relative to the States.
All right, so we've got a couple votes for U.S. market continuing to lead the way. I'm going to take the other side of it, maybe just to again play devil's advocate. I kind of agree. I think there's a lot of the positive sentiment that's been priced in with Trump's kind of pro growth platform. We saw basically from August the market go straight up and pull forward a lot of those kind of pro growth aspects into the market. So with Canada kind of facing an election this year at some point, potentially we get the same kind of lift. And the only other thing I'll add to that is with the Canadian dollar at 70 cents, you've got to be thinking that all the goods that we do sell, all the resources that we do sell, assuming that we don't get the kind of brunt of these tariffs, start to look increasingly attractive. And if businesses are out there looking for opportunities to invest and you've got a 70-cent dollar and you've got the potential for change on the horizon, you've got to imagine that there's going to potentially be an M&A cycle here in Canada, which could start to ignite some of these things like capital investment that would help our productivity, as you mentioned, Craig. So maybe we see the year of Canada finally come to fruition here 2025.
Yeah. And one thing we can talk about, go back to what Clark you first said with the long end of the bond curve. That's a quote unquote risk that people don't talk about. If you see bond yields start to move higher despite central banks wanting to cut rates, that's going to pose some headwinds for broader markets in both Canada and the U.S. And you saw that even a couple of weeks ago when bond yields started to get above that or close to that 5% range on the 10-year Treasury. It created some volatility for equity markets. That's a wild card that I think is a big determining factor of how equity markets perform. And then the biggest wild card of all is what happens with tariffs, and that's a known unknown right now. It's complex. It's going to be fluent. And how do we get there? No one knows at this point.
Well, I just want to go back to what Jay said when you started your comments, Jay, on Canadian versus U.S. You said that there was 2 votes for the U.S. market outperforming. Not sure if I said that. I said that I was kind of in the middle a little bit. I just think there's arguments that again, Canadian market will start to outperform the US when you least expect it. And I think there's some potential catalysts. Craig, you mentioned it. And as you mentioned, if there's dollars coming into Canada from a capital investment perspective because of a lower currency, they also come into Canada from a portfolio shift where portfolio managers start to reduce their exposure to US equities and buy Canadian as well. So I think there's some catalysts there. Craig, you talked about, interest rates. What do we think is going to happen with interest rates? I think you just hinted in your comments that there's a risk that interest rates continue to move higher on mid to long-term bonds. I'll take the other side of the coin there, and I said it for years, is that every time that interest rates drop precipitously, people forget they can go up. Every time they rise, as they have in the last few months, quite precipitously, people forget that they can go down. And I think ultimately higher interest rates lead to an economic slowdown. It's one of the contributing factors. And I would suggest that long-term rates will be challenged here. And the bond market will start to price in some economic weakness in the United States this year, with bond rates coming down from where they're at today. That could be healthy depending on what the economic outcome is. But I argue that I don't think we'll see interest rates much higher than where they are today on 5, 10, 30-year bonds.
Yeah, they've already started coming down so far in 2025. So, I would expect they'll be range bound, between 4.5% and where we are currently. That's I don't see the U.S. Federal Reserve cutting rates aggressively, much like was anticipated 6 months ago.
The big risk to that is obviously if Trump is successful in implementing a lot of his kind of America First policies and in employing tariffs on everyone, that is super inflationary at the end of the day, and that could result in some big changes in interest rate expectations depending on, again, how successful he is at implementing some of that.
Final thing I'm going to say here, and you just brought up, that includes tariffs, for example. And again, coming back to the Canadian equity markets, this expectation that we're going to see, whatever it is, 180,000 job losses in Canada, 200 billion in economic weakness if these tariffs come in. And, I think that's currently negative for Canada from a sentiment perspective. I don't think that's going to happen. And I think that's, again, another positive catalyst for Canada or for the Canadian market when it becomes apparent. I could be wrong, but my call would be those tariffs are not going to go through to that extent. And going back to the inflation question, Trump ran heavily on a platform of, look what Biden did for you with runaway costs and runaway inflation. You can't afford to live anymore. That kind of a platform. He does not want inflation. His team knows that tariffs are going to be highly inflationary. I just don't think it'll happen. When it's evident they won't, I think that's positive for Canada from a sentiment perspective as well.
As opposed to maybe a good approach too, as opposed to saying outperformance. If there's a more measured approach on the tariff conversation, and at this point, a lot of smart people are saying it's negotiating tactics, leading up to the USMCA renegotiations in 2026. Let's say it's a bit of a walk back approach from the Trump administration, and as Jay, you say, you get a turnover of the Canadian landscape. Why not? Why can't you make a call that both sides of equity markets can perform well, as opposed to saying one's going to outperform the other? Maybe they got support on both sides of the border.
Well, that wouldn't be very fun for our market call episode. So we're going to keep a clean scorecard here. And where are we at right now with the U.S. versus Canada? I think I'm in favor of Canadian outperformance. Craig, you said U.S. Clark, you're on the fence. Can we?
Last argument, Craig.
Say U.S. I just think
evening the playing field. And on that topic, Craig, one of the things you mentioned was, and I talked about was the growth sectors in the United States, technology. That's really led the way for the US market. So I'm curious, changing gears a little bit and talking more about maybe themes or sectors. And this might actually result in a difference in performance between Canadian and U.S. markets. I mean, what are your thoughts on continued outperformance of the technology sector? And is there anything else out there that, maybe is under the radar from a theme perspective that's maybe being underappreciated right now?
What I can say for the Mag 7, and again, you actually look at the performance of some of those Mag 7 names, if that's you're talking about the mega cap, Apple's down 15-20% from its high. If you look at Microsoft, it's essentially traded sideways for a while. Amazon, Meta, different story. They've outperformed. So they haven't all been, exceptional performers over the last couple of years. What I will say is the continued build out of AI, I think is going to be a catalyst for a lot of those names. We talked about it before that I think the Amazons, the Metas, the Microsofts, the Oracles of the world, they're investing upwards of $250 billion to support this AI build out. You saw that just recently this week with the $500 billion program, Stargate, initiated by Trump, with $100 billion right out of the gate to continue to support that. And if you look at their earnings growth that a lot of those names have seen over the last number of years, they're 23%, they're 30%, they're 25%. Now, I'm not saying they're going to grow at that pace, but I still think there's a tailwind behind those names. But again, you're going to see some divergence in performance from each of those.
The only thing I would add there, Craig, is that yes, if you've seen 25 to 30% earnings growth with some of these companies, say compounded over the last 5 years, the market to some degree extrapolates that often too far into the future. And we don't need to see negative earnings, but negative earnings growth. So if that growth of 25 to 30% with company A slows to 15 to 20%, still robust growth, but stock prices will have to adjust negatively if the growth projection slows down relative to what the current expectation is. And I think that a lot of those growth expectations have gotten ahead of themselves, and that alone could cause some weakness with those technology stocks, a little bit of reversion to the mean. I think they're all good companies and good holdings, but I think that could cause some of that shift as well.
As portfolio managers, that's what we want to look for, is any sort of sector that is showing leadership. And I still believe that at what we know today, those names continue to show leadership, much like financials are showing leadership, right? It's until that leadership changes, I think you still want to have exposure to those names.
So tech leadership, I mean, I think it's tough to imagine a third year of tech outperformance. I mean, that rarely has happened in history. If you look back at kind of which sectors have performed best over the last 20 years, you tend to see a change in leadership pretty regularly. There's a lot of really, really depressed sectors out there. I mean, we touched on the telcos that particularly here in Canada, but also in the US, have just been really poor performers. And, at the end of the day, they've got pretty solid businesses still. There's some changes happening, and we've got to be cognizant of that. But at the end of the day, they're extremely high cash flow producing companies with some challenges. But I would say that from a performance standpoint, that's a pretty good place to be looking still. I'm gonna take a little bit of a non-answer here, but I'm gonna say it's something other than tech that leads the way in 2025. I think it's the valuations are just too high at this point, and a lot of good progress is priced in, and we're going to see something emerge here that probably is a lot less expected than tech for 2025 will be the sector leader.
So you got a 14 out of 15 chance of being right and a 1 out of 15 chance of being wrong with, I think it's 15 sectors. So I'm going to put you on the spot here, and maybe hedge your bets a little bit and pick 2 or 3 sectors you think are underappreciated that could be, as Craig say, show leadership relative to technology. If you don't want to, that's fine. But
yeah, I'll throw out industrials as my potential. U.S. industrials, I think, is going to be the top performing sector of the year ahead. There's been a lot of investment in the U.S. There's going to be a lot of capital chasing things like building out data centers, building out power producing entities. I think there's going to be a lot of capital investment that helps propel some of these businesses. Deregulation is going to be heavily favorable to the industrials. So that's my call for 2025.
Well, that's similar to what I was actually going to say. Is my call is a resurgence of North America energy, and that's going to be nuclear side of things. It's going to be a continued build out of oil and gas. less focus on clean energy. You're seeing that more recently. You talked about that, Jay. The AI build out and the energy demand that pulls, it's actually overwhelming to understand how much that is, and the build out that's going to be required to continue to support that is hundreds and hundreds of billions of dollars. So I wouldn't be surprised. You're probably, Trump's drill baby drill, his approach on that. I think that's probably going to take a lot more time. I don't think you have the full commitment yet from the exploration and production companies. But ultimately, I think the resurgence of energy here in North America, that's a theme. I don't think that's just a theme for 2025. I think you're going to see that for a number of years.
I would agree with that, Craig. I think when you talk about the huge demand for AI, you could argue crypto mining for what it's worth as well. The huge demand for energy cannot be met, with windmills, solar fields or whatever. And I don't mean out of disrespect for the clean energy theme. There's not enough supply out there. If you look in North America, what do we have excessive supplies of? It's natural gas. And with drill baby drill and maybe, some change of regulation here in Canada, more production of oil as well, but particularly natural gas. So I think I would agree with you there.
Well, I guess here's an interesting stat that I actually read this morning. You know that 90% of the world's data that is stored has been created in the last 2 years, when you think about that, and a lot of that's AI driven. And again, that's the cumulative pull that's going to have on energy is, as I said, it's beyond rational right now. I can't even wrap my head around it.
So moving on a little bit, the question we were asked constantly is what's going to happen with the Canadian dollar. We've had a pretty tough go here the last 6 months with the Canadian dollar trading below 70 cents. Similar to what we've just been discussing, politically, geopolitically, energy related. At the end of the day, Canada is still tied to the price of oil, or the Canadian dollar is still tied closely to the price of oil. So that's going to obviously be a big factor. Tariffs are going to be a factor. The end of 2025, do we think the Canadian dollar is closer to 75 cents or 65 cents?
What's it at now, Jay? 69 and change?
It's actually 70 cents as of this moment.
70? Yeah. I would take the call of being on the positive side of that for the Canadian dollar. I think, as you just identified, we talked about earlier, there are some catalysts for Canada that, if those catalysts, one or two of them play out, that could be tariffs not coming in to the extent or at all. Could be political change. It could be a resurgence of energy and higher energy prices, a number of things. I think there's a lot more that can go right in Canada over the next year relative to what's priced in right now, and a lot less that can go wrong. And on the flip side, I think there's maybe some more that can go wrong in the States relative to what's priced in, rather than, more positive and more right that isn't yet priced in. The second thing is interest rate differentials. We talked about this on our last call. That's really the primary driver of the difference in currency. And if Canadian rates, which have been short-term rates, being dropped quicker than the Fed funds rate in the States, that direction of change just starts to moderate. That's positive for the Canadian dollar as well. So I would take closer to 75 than 65.
Greg?
I would echo the exact comments. Yeah, no disagreement there. Again, the wild card, you get a 25% tariff imposed on Canada. Our currency is going to fall, and probably fall significantly in a very short period of time. I think what we know right now has been priced into the loonie, as Clark said. It's the wild card of tariffs here in the short term. But if I was to bet, 2025, we end up with higher than where we are currently. I think a change to a conservative government will support the loonie as well.
Yeah, I was going to say the same thing. I think we touch 65, and then we end the year closer to 75. So I think the three of us are in consensus, and maybe some hopium in there, as the three of us do like to venture south occasionally, and it's pretty painful to do so at 70 cents and less. So All right. Any out of left field calls that any of us want to make for the year before we wrap up here on today's forecasting?
I think on that theme that you just mentioned, political change in Canada. So, do you want to, dive into that? This is going to be an interesting year. We have an election slated for the fall. That election has a good chance of happening before that. Um, we talked about this last year. Who might be, the U.S. president coming into this year? Where do we see that if we want to go on the edge here and make a call on that?
Yeah, let's start with you. Let's get your views on that.
Well, I'm gonna predict that. I mean, this is not really. I mean, I'm gonna go with the consensus view. The polls are showing Polyev is gonna be the next prime minister if they have an election today, and I think that's likely where we're headed. So, and I think that will be good for Canada economically and for the Canadian market. So, that's my call for the next prime minister.
I'll base my call off of, a number of developed countries went to the polls last year, and I think the majority of the incumbents lost, and I think that's a reflection of people want change. So I would agree with you, Jay, that I think you see a change of government this year. The polls, as you said, right at this point right now, are highly skewed towards the Conservatives right now. We'll see what the Liberals come up with. I think it's by the next couple 3 weeks who's going to be their new leader. Whether it's Freeland or Carney, those seem to be the two front runners at this point. My guess is if it's Carney that emerges, that maybe provides a little bit more support for the Liberal Party, but remains to be seen. But I think we'll be going to the polls by May. That's my prediction.
My call on that, and I can see Jay smirking because he knows how I feel. But I think you're probably right on what the outcome is. That'd be my guess. But I mirror your thoughts, Craig, on the Liberal Party is that the front runners being Freeland and Mark Carney. I think Freeland is, although she's come out and now she's going to say she's going to nix the carbon tax, and she was one of the big proponents of that. She is Trudeau's policies in disguise, and I think the world or the country knows that. I think their chances there would be not much better than had Trudeau run himself. Mark Carney, I think if anybody looks into Mark Carney, extremely smart guy, but his policies are no less left-leaning or left of center than Trudeau or Freeland. A lot of people don't realize that because they see him as a central banker that turned things around in the UK and Canada. But I think that the way that he comes across, his intelligence, I think he presents a significant challenge to the Conservatives if he's the leader. And I think it'll be interesting to watch who wins the leadership race for the Liberals. And head to head with Pierre, I think Carney will do a fantastic job, at least reigniting some interest in the Liberal Party that they've lost recently. But I would still kind of go that I would agree that, as we've seen in other parts of the world, people in general are looking for change. And I personally think, and this isn't really a political comment, but it's just realistic, is Canada needs some change. And I think we're more likely to see change with a change of government or party relative to just a new leader of the Liberals.
All right, let's finish with something interesting here. Give me something we can expect in the year ahead that no one's talking about.
Well, here's something I just thought of. Our Plena team will be launching a new website. That's pretty exciting. We were working on that for a number of months, so it should be more client friendly, a little bit more accessible, and easier to navigate. So I'm looking forward to having that rolled out. It's within our team. We continue to build out our financial planning offering and investing in new software and technology. So, for the offering that we provide to the clients, I'm pretty excited what the new year brings, as we always try to enhance what we do bring to the table. We're sitting in a new office here in Kelowna. That's pretty exciting. So hopefully for you guys in Vancouver, there's an investment in maybe some new corporate space for you guys as well.
Well, there is. I'm not sure if that's what Jay was asking, but I'm glad you brought all those things up, Craig. Telling clients what we do, but interesting calls for. I didn't even think about this, Jay. Interesting calls for 2025.
Okay.
I'm going to let Jay tackle that. And I'm going to think of something, one or two things while you're speaking, and don't know if I'll come up with something. But why don't you tackle that, Jay?
Yeah, I'm going to say 2025 is the year that we confirm alien life.
Go ahead. and okay. Okay. Sorry. You just paused my thinking there. Wow. Craig, I'm going to go back to you because now I have to think again.
Oh gosh. I don't know. I'll leave this for the next podcast. I don't have anything that kind of jumps out at me as a consensus call.
I'm going to go I'm going to go back to Trump. And we talked earlier about, hey, in his inauguration, there's all these tech CEOs and founders in the room, buying favors essentially. Elon Musk is running the Doge department. You've got, David Sachs, for example, in there is a crypto czar. If you remember back 8 years ago, Trump went through considerable change in his administration. People just falling out with him. And I think there's this notion now that this current team has got some staying power. I'm just going to say that I think will be proven wrong. I think that a lot of these people that are surrounding Trump right now are going to have their own level of frustration and move on. And I think that will, if that does occur, some of these themes that are talked about right now, this excitement around Trump might wane a little bit. That's a broad call, but I think that's I just think there's so much excitement about that, and it happens so quickly, that shift of the tech from the Democrats to the Republicans. I just think maybe expectations may not play out.
Final one. My call is the continued push for return to office and the hybrid work from home approach is going to continue to lose its luster. And you're going to hear more global CEOs mandate workers back to the office. That's my call.
So Amazon just announced that. I'm not sure if you're aware, in the last week or two, 100% back to office, I believe, with Amazon. And one of Trump's, I believe it was an executive order, was to mandate all federal employees 100% back to work. So, when you have, a company like Amazon doing it, and I don't want to dive into some of the other executive orders on certain things in the federal government that Trump is doing, but I think some of these very, significant policy changes of his, if it's at the federal government level, is going to trickle down to, state, provincial, municipal governments, and also corporate America and corporate Canada as well. So I would agree with that.
And I think there'd be some nice knock-on effects to that. Is certainly a revival of some downtown cores that have been kind of hollowed out by COVID and work-from-home policies, and all the businesses that have been struggling with lower populations in the core centers. So that would be kind of an interesting one to see play out. But I think those are three kind of interesting ones. So with that, we'll wrap it up for the first edition of Wealth Talk for the year. And we thank everyone for joining us. Hopefully we can get some feedback from this. Not all politically motivated, hopefully, and we can look forward to seeing you next time, and all the best for the year ahead.
Thanks, guys.
Thanks, Jay.